This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, September 17th, 2015. Euro dollar. So euro rallies have stalled out for now ahead of 114, and there's significant resistance above 114, some internal resistance that trades up into the 114s and ahead of 115. At this point, we'll need to see a break above 115 to take the pressure off the downside, and until then, there's risk for a lower top ahead of the next major downside extension below recent lows at 1087 and back towards that 20th of July low at 108.09. Again, only back above 115 would take the pressure off the downside and expose a retest of what could be right now a medium-term lower top at 117.15. Sterling dollar. So cable has broken up in recent trade, with the market taking out some psychological barriers at 155. The upside break, however, has stalled short of establishing a close above the 155 level on Wednesday, and this does keep the downside pressure intact. If the market does see a daily close above 155 in Thursday trade, it will open the door for renewed upside, potentially back towards that 2015 high at 159.30 further up. But inability to close above 155 on Thursday will keep the pressure on the downside and open the door for a retest of recent lows at 151.65, below which exposes 150. Dollar yen. So dollar yen continues with its consolidation. We can see that the range has been contracting, but ultimately a lower top is now sought out at 121.74 ahead of the fresh downside extension back towards and eventually below that recent extreme low from the 24th of August at 116.12. Only a close back above 121.74 will negate the bearish outlook for dollar yen. Euro Swiss. So Euro Swiss continues to consolidate after the market broke above psychological barriers at 110, but the consolidation is classified as a bullish consolidation, with the market now seen towards a measured move objective at 112. At this point, a higher low is in place at 107.14, and only back below this level would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar has enjoyed a nice little recovery over the past several sessions out from multi-year lows, though the rally is expected to stall out with the broader downtrend still firmly intact in favor of a lower top and fresh downside extension back below the recent multi-year low and towards that measured move objective at 68.30 further down. Ultimately, only back above 74.40 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has been locked within a consolidation off recent 11-year highs at 133.54, though setbacks should continue to be very well supported ahead of 128.60 in favor of the next higher low and bullish continuation towards next key psychological barriers at 135 further up. At this point, only back below 128.60 would compromise the bullish outlook for dollar CAD. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and the rally over the past few sessions has been mild, with the market expected to put in a lower top ahead of the next major downside extension below that extreme low, that multi-year low from the 24th of August at 61.30. At this point, only back above 67.40 would compromise the bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 has broken higher in recent trade, though ultimately the market has been locked within a choppy consolidation that's been showing a contraction in volatility. At this point, there's risk for a lower top now to carve out somewhere around the 2000 area ahead of the next downside extension back towards those recent lows that we saw around 1830, and then to threaten some support going back to the fall of 2014 at 1819 further down. At this point, only a daily close back above 2000 would compromise the bearish outlook and put the pressure back on the top side. So Thursday is going to be interesting here. A close above 2000 on Thursday will open the door for fresh upside, while inability to close above 2000 will keep the pressure on the downside for the next major downside extension and bearish continuation. Gold. So gold has put in an impressive recovery rally, and the market looks like it wants to put in a medium-term higher low above those recent multi-year lows at 1073 in favor of the next upside extension back above 1170 and towards 1233 further up. At this point, any setbacks should continue to be very well supported above 1100 on a daily close basis, while only a close back below 1100 would compromise the recovery outlook for gold.